Hello everyone and welcome back to xn.com. It's Monday, January 8th and you're watching the first weekly technical outlook video for 2024. It's expected to be relatively a quiet week of data releases, but the US CPI inflation figures will definitely be under the spotlight on Thursday. The earlier Australia will release its monthly CPI inflation data, while on Friday the UK will report its monthly GDP growth figures. So starting first with dollar yen and the US inflation data, expectations are for a slight pickup in the headline inflation to 3.2% year on year, but the core measure could drop to 3.8% from 4% previously, and that could still support the case for a rate cut as soon as in March, especially after the ISM non-manufacturing PMI figures somehow question whether for how long will the U.S. labor market will stay resilient. So if the data disappoint, if we see a weaker CPI inflation, a core CPI inflation measure in the U.S., that could still add some pressure on the U.S. dollar. Dollar yen failed to close above the 144.70 resistance on Friday, despite the spike to a high of 145.96. So close above that barrier still needed to create more to activate fresh buying orders. If we look at the technical indicators down here, the RSI is still around its 50 neutral mark. The manganese strengthening, but the stochastics are also near their 80 overbought levels. So there's still some caution in this market, despite this bullish trend line breakout, and we can see that the 20 and 200-day moving averages have already posted the bearish cross. So there's still some caution in this market, and traders are probably waiting for a clear close above the 144.70 number, which is also the 38.2% demand retracement is doubtful before they target the 146 number and the 50-day moving average at 146.78 at the moment. Then if the recovery continues above that line, we may see some consolidation around the 61.8% Fibonacci of 147.45. Now in the event the price declines, closes lower today, confirming Friday's bearish doji candlestick, then we may see another test near the 20 and 200-day moving averages. That is also where the 23.6% mark of 143 is located. So another break here, another close lower could drive us back down to test this broker resistance line 141.60, and then lower than that, I expect the price to stabilize somewhere between the 140.8 region and the 139.40 mark, where this important support trend line coming from January 2023 is located. Now turning to pound dollar and the UK GDP monthly figures. The UK is not expected to show a huge improvement in November, it's expected to month on month. It's expected to show a 0.2% growth, but the 3-month average could return to the negative region, showing minus 0.1% contraction. So overall, the UK economy is expected to stay stagnant, and that could prevent any meaningful rally in pound dollar, especially if US CPI inflation figures surprise to the upside. We can see that pound dollar is still trading below the 1.2720 important barrier. It failed to cross back above this broken support trend line, which happens to be in the same region. So there is a risk for a downside correction. Nevertheless, for that to happen, the price will need to cross below the 20-day moving average, which is currently acting as strong support around 1.2670, and this short-term ascending trend line could also protect the market from additional declines around 1.26. If not, if we see further declines from here, then the 50 and 50-day moving averages could add some footing under the price at 1.2530. I would also pay attention to the 1.25 psychological mark before the 38.2% Fibonacci mark of 1.2460 comes under the spotlight. And additional declines from here could basically drive us down to this support trend line from the 2022 low currently seen at 12.24. While looking at the technical indicators, we can see that some weakness is still evident. The RSI is above its 50 neutral mark, but it's pointing downwards. The commodity is also weakening, whereas the stochastic oscillator is trying to pivot higher. Now, if the price were to cross above the 1.2720 mark, I expect the pair to rally towards the 1.2850 level to test this short-term ascending line, or then perhaps even reach the 1.29 psychological mark. And then above that, all the attention will turn to the 1.2965 and 1.30 region. This is where this tentative resistance line is located. And finally, looking at Aussie dollar in the Australian CPI inflation figures, while the data are expected to weaken, the core measure is expected to fall to 4.4% from 4.9% year on year. Previously, there were a couple of reports raising confidence about a weaker inflation. So a weaker CPI report may not be that surprising, but it could still raise the odds for a rate cut as soon as it may. If that happens, then Aussie dollar could extend this downfall out of this bullish channel. So a bearish breakout here could create more losses, likely towards the 50 and 200-day moving averages, which have recently posted a bullish cross, but that still needs a confirmation. If we fail to rebound here, rebound will be 0.66 and 0.66 at 30 territory, then another downfall could follow, probably towards 0.65, 0.6530 support area where the 2020 support trend line is placed. Well, according to the technical indicators, some caution remains. We can see that the MACD is set to cross below its 50 neutral mark. The MACD is weakening as well, and the stochastics have yet to rise above near 20 oversold level. Nevertheless, if the price manages to cross above its 20-day exponential moving average, currently 0.6715, then we may see a quick rebound up to the 0.68 round level, and perhaps a stronger rally up to the 0.6894 level, where the upper band of this bullish channel is located. That could be a very important region to watch, given that the price has posted a double top pattern back in summer around this region. If the recovery continues, then the next stop could be around the 0.6980 level, which was a tough barrier back in January and February 2023. So that's all for this week's important FX pairs. Thank you for watching. I wish you had a great trading day.